Iraqi Dinar Today latest news. We have a crucial development that demands your immediate attention, one that is sending undeniable tremors through the dedicated currency community. Prepare to reconsider everything you thought you knew about the current status of the Iraqi dinar, because something significant is reportedly taking place within the highly guarded systems of one of the most powerful banking institutions in the United States. We are receiving widespread, persistent reports indicating that Chase Bank has taken the extraordinary step of placing a defined restriction or cap on the exchange of the Iraqi dinar. Insiders are not calling this a system error or a temporary anomaly. They are characterizing this move as an intentional, strategic deployment designed for a specific purpose related to a major forthcoming event. The fundamental question at the heart of this unfolding story is simple. Why would a behemoth like Chase choose this precise moment to impose limitations on dinar holders? What confidential preparations or regulatory mandates are guiding their actions behind the bank's secure digital firewalls? Our goal tonight is to meticulously dissect this mystery. We need to understand the potential implications of this new restriction, explore the strategic timing of its appearance, and analyze how this structural change might ultimately influence the financial trajectory for every individual currently holding either the Iraqi dinar or the Vietnamese dong. Remain focused throughout this deep dive, as the confluence of these facts may reveal just how close the currency community could be to witnessing a massive financial shift. The initial trigger for this wave of intense speculation was a discovery made over the last few days by observant members of the currency community. They noticed a peculiar change within Chase Bank's internal foreign currency exchange listings. The Iraqi dinar, a currency that has often been dormant or listed without active exchange options in major U.S. banks, suddenly reappeared in their live systems. Yet, this reappearance was accompanied by a clear, specified transaction ceiling, an absolute cap on the volume that could be converted. This dual development, the active listing paired with the sudden limits, spread like wildfire across online forums, sparking urgent queries about the bank's unexpected internal readiness. The key inquiries immediately focused on the rationale. Why would one of the largest financial players in the U.S. suddenly reactivate the dinar on its core exchange platform, only to immediately place a non-negotiable limit on the transaction size? Based on multiple accounts from various sources within the community, the new system now indicates a restriction on a per-customer basis. While the precise figures remain under review, with some reports suggesting a cap equivalent to around 1 million U.S. dollars worth of dinar, others speculate that the exact maximum amount may be tiered, dependent on the customer's account standing, such as being a private wealth client versus a standard retail account holder. The undeniable fact, however, is that a quantifiable change has been deliberately executed within Chase's extensive, secure network. This alteration within the back-end systems of Chase Bank is significant precisely because of the institution's colossal size and critical role in global finance. Chase is not merely a regional bank processing small-scale conversions. It is a global banking powerhouse with integral operational links to the mechanisms of the U.S. Treasury and the Federal Reserve. Consequently, when an institution of this magnitude conducts internal currency adjustments or stress tests a specific currency setting, it is typically viewed as a concrete signal of forthcoming real-world economic preparations. It strains credulity to suggest that a major bank would invest time and technical resources into establishing transaction limits for a currency that carries no perceived long-term material financial importance on their books. The core deliberation, therefore, shifts to strategic intent. Is Chase Bank actively preparing its internal infrastructure for the formal, structured rollout of a currency exchange process directly connected to Iraq's widely anticipated revaluation event? Or is this action a calculated, controlled test of liquidity management and procedural readiness before a much larger, public announcement is made regarding a global monetary shift. Regardless of the precise motive, the timing of this quiet internal system change is highly suggestive, indicating potential preparatory work that is too coordinated to be easily dismissed as coincidence, confirming that institutional-level planning is underway. The Dinar community is now awash with highly plausible theories that attempt to explain this restrictive measure. One particularly strong theory posits that the exchange cap is an essential component of Chase's comprehensive liquidity management strategy, designed explicitly to handle the potential fallout from a sudden, widespread revaluation. Consider the colossal logistical challenge that would ensue if the dinar's or dong's value suddenly spiked, prompting millions of holders globally to attempt simultaneous exchanges. Such a mass influx would place a nearly impossible demand on the bank's immediate cash reserves. By implementing phased limits at this preparatory stage, the bank can rigorously protect its operational integrity, maintain an organized cash flow, and ensure meticulous verification of every single transaction during the initial rush. If this theory accurately reflects the bank's strategy, the revelation is profound. It suggests that major global financial institutions are not only acutely aware of the potential for a currency revaluation, but are also deeply engaged in engineering the practical, structural mechanisms required to manage such an event in a stable, orderly fashion. The restriction in this context is reframed as a measure not to block conversions, but rather to organize and streamline the rollout into controlled, manageable phases. However, this preparatory awareness also brings with it a powerful caution that is gaining traction among knowledgeable commentators. A unified warning is being issued by several of the most trusted voices within the dinar analysis world. Exercise extreme patience and refrain from rushing into the first available exchange window. The warning is based on the pragmatic expectation that the launch of a revaluation event might be executed across several distinct phases, and it is highly unlikely that every financial institution will offer the final, globally stabilized rate on the very first day of activity. Consequently, individuals who attempt to convert their currency in a panicked sprint to the bank may discover, to their detriment, that they did not secure the optimal value for their holdings. Patience, therefore, is being elevated to the most critical strategic asset for currency holders in this period. The cautionary scenario painted is one where a holder, overwhelmed by excitement, exchanges their currency immediately, only to realize days later that a measured, short delay could have resulted in a substantially higher return. This is why experienced observers are vehemently advising holders to adopt a watch and wait approach. They should prioritize verifying that the official, universally confirmed international rate is firmly established and stabilized before initiating any large-scale action. The goal is to secure the best possible long-term value, not simply to be the first to transact. The historical behavior of Chase Bank offers compelling insight into why it may be at the forefront of this current operational shift. Historically, the bank has consistently demonstrated a pattern of being among the first major U.S. institutions to integrate foreign exchange updates that are linked to significant geopolitical or economic events. In the past, when Iraq announced new major monetary policy measures, Chase's system was often the quickest to reflect these internal changes, frequently doing so well ahead of any widespread public confirmation. This recurring pattern suggests that the current quiet update, which includes the IQD back on its internal listing, is rarely a matter of chance. Instead, the decision by a financial powerhouse like Chase to adjust its back-end currency list and include the Iraqi Dinar again is typically seen as a powerful indication that complex, high-level international settlements or rate calibration protocols are being discreetly tested and validated behind the scenes. This kind of systematic, infrastructural preparation serves as a barometer of institutional readiness, confirming that the world's banking giants are proactively engaging with the possibility of a significant shift in the dinar's international status, well before the official announcements are made public. Adding another vital layer to this complex tapestry is the significant domestic reform agenda currently being driven by Iraq's central bank. For over a year, Iraq has been meticulously working on a full-scale overhaul and modernization of its entire currency and payments framework. This ambitious plan includes the digital linkage of its payment systems, the implementation of stricter new regulatory standards for money transfers, and the forging of deeper, more cooperative ties with established international financial bodies. The ultimate, publicly stated goal of these reforms is to elevate the dinar from a largely domestic currency to a fully trusted, regional currency capable of facilitating stable trade and attracting major foreign investment. To successfully execute this transition, the Iraqi dinar requires unimpeachable stability, global credibility, and seamless accessibility within the international financial ecosystem. This is precisely where the global infrastructure provided by leading banks like Chase, Wells Fargo, and Bank of America becomes essential. These institutions act as the critical gateways that connect Iraq's reformed and modernized financial system to the wider global marketplace. Therefore, the news that Chase has re-added the dinar to its system with operational limits should be viewed as more than a mere rumor. It could very well be the first visible, technical step in this immense, multi-phased international integration process coming to light. In this context, the imposed exchange cap ceases to be a barrier and instead functions as a strategic signal. It communicates clearly that the internal banking system is now fully prepared to process the dinar's transactions, but only within a framework of secure, controlled, and managed volume. This strategy is akin to a pre-launch phase before a grand public opening. All the internal mechanics and systems are tested and proven under controlled conditions before the full weight of public demand is allowed to flood the system, ensuring stability and preventing catastrophic overload in event of an official rate change. A common and entirely valid question arises. If these internal changes are real, why has Chase Bank remained silent and not issued a public statement confirming the restriction? The answer lies in the fundamental nature of bank operations. Major financial institutions strictly refrain from publicly announcing internal currency testing, system maintenance, or the specific technical details of their foreign exchange protocols, as these are classified as sensitive operational details, not items for a press release. They only transition to public confirmation when the new rates are officially sanctioned, fully active, and ready for broad public use. Therefore, the current institutional silence should not be interpreted as proof that nothing is occurring. Rather, it is strong evidence that the meticulous, highly controlled rollout is still underway behind closed doors. This pattern of quiet, internal updates preceding official confirmation by days or weeks is consistent with the way major currency rate adjustments have historically been managed by global finance. Let us now project forward and consider the practical implications should these established restrictions be activated on a global scale. Imagine a morning when the Iraqi dinar becomes fully tradable internationally. Chase, being one of the first banks with updated systems, begins accepting exchanges, but strictly adheres to the established per-account limit. This measured approach would allow the bank to precisely control its liquidity exposure, accurately monitor the source and flow of all transactions, and safeguard the system from potential crash under the weight of enormous, simultaneous demand. The initial phase of exchange activity would almost certainly be reserved for high-level private clients, institutional investors, and individuals who possess thoroughly verified and documented purchase records. Only after these controlled initial transactions are successfully completed would the process gradually expand to accommodate the general public. This carefully paced, gradual release mechanism is designed to provide dual protection for both the participating banks and the currency holders themselves. However, experienced insiders are reiterating a critical warning. The very first few days of exchange activity are highly susceptible to temporary rate fluctuations and instability. The caution being shared is that early rates made available could very well not reflect the final, true stabilized international value. This means that holders who act prematurely, driven by excitement or fear, risk converting their currency at a less advantageous valuation. This is the core reason why many influential voices in the currency community are advocating for absolute calm and strategic deliberation. They firmly believe that a brief, patient waiting period will lead to a substantially stronger, more equitable rate once the global markets have fully integrated the change and settled into a stable balance. The ultimate beneficiaries will be those who wait, not those who engage in a reckless race to the finish line. The most compelling aspect of this entire story is how neatly it dovetails with the published economic reform objectives of the Iraqi Central Bank for the 2025 period. The central bank recently revealed its intentions to finalize the international exchange integration phase and is actively testing operational mechanisms with its core U.S.-based banking partners. The precise timing of this public confirmation from Iraq and the concurrent internal system updates at Chase Bank align almost perfectly, strongly suggesting that this is the moment of synchronization that the entire currency market has been tracking for years. The evidence is mounting. Iraq is relentlessly pursuing financial autonomy. Major banks are demonstrably updating their core systems, and the IMF has consistently signaled its full support for Iraq's planned transition to a more globally integrated and active currency. Furthermore, the broader U.S. financial landscape is clearly bracing for a paradigm shift in foreign exchange operations. Driven by the relentless expansion of digital banking platforms, the increasing demand for secure cross-border settlements, and evolving global trade alignments, currencies that have been historically undervalued, like the dinar, are now receiving intense institutional attention. For years, the dinar has been traded at a fraction of its true value. Yet, as Iraq strategically fortifies its economy, diversifies its financial structures, and reduces its dependence on the U.S. dollar, its currency is structurally poised for a new valuation that accurately reflects the nation's immense wealth and economic potential. The fact that Chase Bank is already dedicating resources to building the technical infrastructure for this change indicates a strategic, preemptive measure, not a random occurrence. In light of these coordinated signals, every single dinar holder must now transition into a state of rigorous, methodical preparation. The first rule is to operate exclusively on confirmed system activity or official announcements, disregarding the rampant speculation that dominates the Internet. Second, meticulous organization is paramount. Ensure all dinar notes are stored securely, their authenticity verified, and all corresponding purchase records are thoroughly documented and immediately accessible. Third, expand your research beyond just Chase. Investigate the specific procedures, potential requirements, and anticipated timelines at other major institutions like Wells Fargo, Citibank, and Bank of America, as their processes may differ significantly. Fourth, ensure all your personal documentation, identification, proof of address, and account details is current and ready for instant use when the process is officially launched. The single most critical preparatory step is the development of a rational, long-term financial plan. You must decide in advance the precise amount you intend to exchange during the initial, controlled windows and the amount you intend to hold for long-term growth. The market will undoubtedly experience periods of volatility, and rates are likely to fluctuate multiple times before a final peak is established. By maintaining a patient, strategic, and informed approach, you will hold a significant advantage over those who act purely on emotional impulse. This phase of the journey is a test of financial discipline, which, more often than not, proves superior to reckless speed. To gain perspective, it is necessary to ask why this confluence of events is happening now. The global financial system is undergoing a rapid, fundamental metamorphosis. New currency platforms, advanced settlement systems, and shifting trade alliances are globally redefining how sovereign nations handle the exchange of value. Iraq, with its massive, untapped oil reserves and relentless infrastructure development, simply cannot sustain an artificially suppressed currency value forever. The world needs stable energy markets, and that necessity translates directly into a requirement for a stable, revalued Iraqi currency. As the Central Bank of Iraq pushes its reforms forward, the U.S. banking infrastructure, particularly its giants like Chase, is compelled to prepare to handle this systemic change. What we are observing now is that institutional preparation being quietly implemented, one verifiable step at a time. The question of how close are we remains unanswerable with precision by anyone outside of the highest levels of global banking and government. However, when every significant, measurable signal, internal bank system updates, the establishment of exchange limits, and official government reform declarations begins to align seamlessly, it serves as the strongest possible indication that the entire process is moving into its final, operational stage. The signs are simply too numerous and too coordinated to be dismissed as mere coincidence. The multi-year period of unchecked speculation is giving way to a new reality. The banks are not denying the updates. They are merely maintaining a professional silence. The silence from a financial titan like Chase often speaks louder than any public announcement, strongly suggesting that something profoundly real is being established beneath the surface. This leaves Dinar holders today standing at a moment of historical financial potential. The pathway forward requires unwavering composure, continuous knowledge acquisition, and absolute readiness to move decisively when the final, official confirmation is released. If this reported exchange restriction is genuine, its existence serves not as a barrier to wealth, but as a definitive operational roadmap. It confirms that the necessary financial infrastructure is robustly in place. The core systems are ready to activate, and the world's major banks are now actively anticipating significant near-term action. In conclusion, this story is not a call for panic or excitement. It is a final, urgent call for calculated preparation. Chase's decision to restrict dinar exchanges may prove to be the most compelling and tangible evidence, yet, that the dinar's moment of international recognition is closer than at any point in its history. As is true in all major financial transitions, strategic individuals prioritize clarity and verified data over emotional hype. When the moment of change arrives, it will be the holders who remained patient, stayed informed, and acted with discipline who will reap the greatest reward. Keep your focus sharp, your documentation ready, and your long-term mindset steady, because when this switch is finally flipped, it will be a monumental global financial transition.